Wall Street's major indexes closed lower on Thursday, one day before key jobs report numbers, as concerns mounted that the Federal Reserve's aggressive interest rate stance will lead to a recession. The Dow and S&P each fell more than 1%, while the Nasdaq dropped about 0.7%. Investors are eagerly awaiting Friday's September jobs report, with expectations for non-farm payrolls to increase by 250,000 jobs and the unemployment rate to stay unchanged at 3.7%. Markets on Thursday took brief comfort when last week's jobless claims numbers came out and showed the biggest uptick in 4 months, giving some investors hope the Fed would ease its rate hikes. But Chicago Fed President Charles Evans was the latest to spell out the central bank's aggressive stance, saying on Thursday that policymakers expect to deliver 125 basis points in additional rate hikes before year's end. Sylvia Jablonski is Chief Executive Officer and Chief Investment Officer at Defiance ETFs.
I definitely think it's a strategy that they have going forward. I think that the Fed has essentially liked the pullback in markets, and I think that keeping this consistent message out there, it's almost the same as the Fed saying like we can't have people think that 5% inflation is okay because then it becomes a reality, right? So it's almost like this psychological thing of we can't let the market think that we will pause no matter what. But it never is no matter what.
As for individual movers, both Tesla and Twitter fell as Apollo Global Management and Sixth Street Partners, which had been looking to provide financing for Elon Musk's $44 billion Twitter deal, are no longer in talks with the billionaire. And shares of Alphabet closed basically flat after the launch of Google's new phones and its first smartwatch.